How to profit from a recession. The stock market's crashing. The economy's slowing down. And the news? It's full of fear. But what if I told you this could be the best time to grow your wealth? Because while most people panic during a recession, smart investors see opportunity. In this video, I'll show you how to spot those opportunities and how to actually profit from a recession. So first, what is a recession? It's when the economy shrinks. Businesses struggle. Jobs get cut. And people stop spending. That often leads to falling stock prices. But here's the secret. A recession doesn't mean the end. It's part of the cycle. And if you're prepared, it can be the beginning of something powerful. When markets drop, great companies often get dragged down with them. Their stock prices fall, sometimes by 30, 40, or even 50%. But the business, still strong, still growing. That's when smart investors move in. Because they're not buying hype. They're buying value at a discount. It's like getting a $100 bill for 60. Here's how you can take advantage. First, build up some cash. You'll need it ready to grab deals when prices fall. Even a small savings buffer can go a long way when others are forced to sell. Second, invest consistently. Don't try to time the bottom. Just keep buying regularly. It's called dollar cost averaging, and it helps you get in at good prices over time. Third, focus on quality. Look for companies with low debt, strong cash flow, and essential products. Think healthcare, energy, or utilities. These businesses tend to hold up, even when the economy doesn't. And fourth, diversify. Don't bet everything on one stock or one sector. Spread your risk across different areas of the market. Index funds and ETFs make this easy. Now, let's talk about what not to do. Don't panic sell. Yes, it's scary when your portfolio turns red. But if you sell during a dip, you lock in your losses. Don't use too much leverage. Borrowing money to invest can be risky, especially in a volatile market. Margin calls can wipe you out in days. And don't blindly follow the crowd. Just because everyone else is scared doesn't mean you should be. Recessions separate the emotional from the strategic. Let's look at history. In 2008, companies like Apple, Amazon, and Netflix were hit hard. But investors who bought during the crash and held made huge gains when the market recovered. The same thing happened in 2020. COVID crushed the market. But recovery came fast, and those who stayed invested, they won. Recessions are scary, but they're also full of potential. If you prepare in advance, stay calm, and stick to a plan, you can come out stronger, wealthier, and more confident than ever. So remember, save cash when times are good. Invest consistently even when times are tough. Stick to strong businesses. And diversify to protect your future. Because the truth is, you don't need to fear a recession. You just need a strategy. If this video helped you, hit the like button. And if you want more no-hype investing strategies, subscribe and join the journey to smarter investing. Thanks for watching. I'll see you in the next one.